All right.
Bury the host.
Andrew, hold on. We still don't have that repaired yet. Now it's good. Great. Okay, now we're good.
Hey,
I'm
fantastic.
ready for you.
All right, beautiful. All right, we are so excited to have you join us today. This is listen, there's a lot of excitement about 2021 because I think 2020, we got kicked in the teeth. We did some amazing things. I mean, the numbers that I've seen on originators is just absolutely phenomenal. But now it's time to take actually some of the things that we've learned, the systems that we built up, and start to put them into place. We are going to be kicking off the MLO Masterclass. This is going to give you all the tools that you're going to need to do so you can not only have actually the same year that you had in 2020, but do even better. And I mean, who else do we have actually better than the lineup that we have today? So we're going to start off with Barry's going to start off. Then next we're going to go into Megan Anderson. Then from there, we're going to get actually inside your mind to talk about growth and scalability with the great Khai McBride. Then we're going to bring Shashank on here. We're going to talk a little bit about his habits, the mindset of a top producer. And then, we're going to wrap it up at that point. Got a special gift for everyone who is attending today. So thank you so much. We really, really appreciate you joining us. Barry, tell me when, whenever you're ready to share your screen, you can bring it up.
I'm ready. It's great to be here, Andrew. It's good to be with you, Shashank, and Khai, and of course, Megan, my teammate. Great to be with all of you guys here. And I see so many people are signing in. So over 400 people already. We're just about to start. So folks, listen, here's the thing. Number one, appreciation to you for taking your time to do this and be a part of this. But we also want to mention to you that, listen, just like you, we're all ADD and we've got a lot going on too. We got our phones are going off with texts and phone calls and our emails going off and this and that. So it's very easy to get distracted. Here's what I'm going to say for the short period of time that we're going to be together. And we're going to go fast. You're going to put your mental roller skates on. A lot of this is building blocks. So I'm going to ask you to resist that ADD and doing your text and your emails and calls. Hey, make believe you're with a client, make believe you're with a referral source, and you really are going to be engaged. You're going to do it for the most important person out there, and that is for you. It's not for me. It's not for any of these wonderful people. It is for you, because I think you're going to get a lot out of this. I've spoken to the team on this, and there's some really good content that's going to help you change your focus a little bit today from working in your business, which is where we are, to working on your business, which is where we really need to focus as well, because that leads to really some big things. So because our time's limited, because we've got to go fast, I'm going to run through some things here quickly. I'm going to share my screen with you. Now, by the way, I'm also going to be monitoring some of the things that come through the chat. So familiarize yourself with the chat. And Megan, I'm going to ask you, or Andrew, I'm going to ask you if you could possibly please monitor that as well. So in case if I'm engaged and I miss something, there's something we should talk about, let's do that. And well, Antonio, really nice of you to say some kind words about money in the streets. Thank you very, very much. So I'm going to share my screen here and let's get going. So you know what? I'm going to kind of call it a little bit of an audible here. And what I'm going to do is I'm going to show you the market first, because we're at an important area. I just want to show you this here very quickly. We're down 12 basis points on mortgage bonds today. And what we've done is we've broken through this important floor. It's the 200-day moving average. And when you break above or below it, it typically constitutes a sea change. Let me show you what I mean here. I'm going to give you a one-year view of this. Well, this coupon, a little bit tough to see because we don't have as much history. Let's go to the 10-year Treasury. When we go to the 10-year Treasury, we are here at 119 is the level that we're out here. We're at 119 now. This was the high of the cycle. We are kind of testing that right now. If we break above this, I think the 10-year gets to, I'm going to show you, 125. The last time it was there was in March 18th of 2020. If we break above that, we're going to go to around 160. Now, I don't think we'll get above this level. I think that we'll probably be able to either stay at 119, or if we break above it to about 125, then you should get some relief. We should get a little bit of a move lower in yield. I'm going to break down all that, but I wanted to show you where we are. We're at a really critical level here. If we break above this, we're going to start to feel a little bit of heartburn on pricing. So I just want to make sure that you're watching this with me. We break above it, probably be a good idea to lock. We hit 125. We do hit 125. We probably will see some relief on that. Back to mortgage-backed securities, just to show you where we have been. You can see here, we did an alert to lock back in December, on December 1st, right at the peak of the market, kind of floated this whole time, was patient, waited till we hit that peak again. That was we did an alert to lock a month later here, January 5th, a month, 35 days later. So we floated for this entire period and then locked again at the peak to avoid this big downturn. But you'll notice here that we hit this 200-day moving average and had a bounce back. We're hoping for the same thing. We kind of found some support right around here. I think that things get a little bit worse. We hit this level, and then I do believe we will start to see some improvement. So the bottom line here is a little bit more pain, but then I think things start to get better. We're kind of nearing the end of this downtrend here. It's not exhausted quite yet. So I wanted to start off with a little bit of chat on the market, but I want to talk about the stock market too. So here's the thing. Stock market is really on fire of late. How much can it last? Are we in for a turnaround? Is this something that we're going to see that we have to be cautious of and careful of? My antenna is up, certainly. I think that that the market is a bit euphoric. And why is that so important? Why is euphoria such a contrarian indicator? I'll explain this all to you, but first, one of the greatest investors of all time had a very famous quote. It says, bull markets are born on pessimism, they grow on skepticism, mature on optimism, and die on euphoria. Now, by the way, bull market, just so you know, why is it called a bull market? Well, it's because the way a bull attacks is with its horns in an upward motion. So bull markets move up. Bear markets move down, symbolizing the way a bear attacks, which is with its claws in a downward motion. So bull markets, born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. So we got to be careful if this is a euphoric condition for the stock market. Well, there's an index that talks about euphoria. It's called the Panic Euphoria Index. And it's done by Citigroup every week. And the current reading is 1.89. A reading above 0.41 constitutes some level of euphoria. So we are at the highest level ever recorded. Let me give you some context on this. So we go back here into the 1980s here. So let's go back about 40 years. And you can see that the highest it ever reached in the past was 1.4, which was the peak of the dot-com bubble before we came crashing down. This was the bursting of the bubble just at around 0.41 when we had the real estate bubble. We had the financial crisis that brought stock prices down too. But here is where we are now. Uncharted territory, very, very high. Now, this could last for a long time. As Sir John Maynard Keynes said, the market can behave irrationally longer than you and I can remain solvent. And this puts us in a position, I think, that at least warrants us to be careful. Now, we talk about euphoria and being something to be concerned about, and it brings me back to the story of Joe Kennedy, John F. Kennedy's dad, where in 1929 he forecasted the stock market crash, and he did this amidst everybody being optimistic and hopped up, probably because cocaine was legal, it was in Coca-Cola. So here he comes trying to kill everybody's buzz, saying stock market's going to crash. He says, no, it's not going to happen. Sure enough, it does. When it did, they said, hey, how did you know, Joe Kennedy? How did you know that this was going to happen? He said, I was getting a shoe shine. And the shoe shine boy started talking stocks to me. Based upon that, I thought, if everyone's in the stock market, including the shoe shine boy, where is the new money going to come from to push it higher? Certainly at a level of euphoria. Just anecdotally, the other day, I'm getting an adjustment from my chiropractor. And the two chiropractors are outside the door talking about different stocks. Did you get in this one? Did you get in that one? Did you plan it? And obviously, their patients are coming in, giving them tips too. And it just reminds me of the shoe shine boy, who today is replaced by people on Robinhood. So this young kid here, doing day trading. All of this is so reminiscent to me of 21 years ago, right before the crash, when everyone was in the market. It's also reminiscent to me before the housing bubble crashed, when everyone was in housing and buying homes and renting them out and flipping homes. This market on the stock market has so many things that remind me, and as Mark Twain said, history doesn't necessarily repeat itself, but it does tend to rhyme. For me, a lot of rhyming going on with inexperienced investors through Robinhood. Everybody in the market, you wonder, where is it going to come? Where is the new money going to come from to push it higher? Well, Is this market expensive on a fundamental basis? And the answer is yes, yes, and yes. My dear friend, brilliant John Walden, as well as my other good friend, Doug Cass, hot tip to them for providing me with this information. But what they are talking about here is that at a historical level, the current environment, stock market win, is the most expensive ever recorded. And it is in the 100th percentile pretty much by every metric: price to book, price to earnings, price to sales, everything you look at. And if it's not in the 100th most expensive of all time, the dot-com bubble eked it out on certain metrics, but this by any measurement is a very expensive market. Okay, so is it due for a pullback? Probably, but when is it going to happen? We don't know. It's the hard part, right? Stimulus is certainly creating a lot of steroidal benefit to this because that is creating some economic activity that is creating some euphoria and some effervescence in this market. Also, euphoria about the vaccine. Also, how about the Fed pumping all kinds of liquidity in, buying with both fists? These are all things that are keeping this market afloat. On a fundamental basis, it doesn't make sense, but on a basis of all of this outside impetus and steroidal effect or gasoline upon it, call it what you will, but the market is being held up by this, and fundamentals right now don't seem to matter until it will. You know, it reminds me when I was a little younger and I had one of my mentors, Jack Grummett, he said to me, Barry, one day somebody's going to pull a plug on the stock market, and man, was he right. And there's an old saying that said the stock market will do the most harm to the most people at the worst time. Wouldn't that be right about now? I'm not saying this is going to happen today, team, but what I'm saying is, look, you work really, really hard for your money. I am diversifying my own personal things. I'm putting things in the VIX, which has done very well. There's ways to invest in the VIX, which measures volatility, because then if there's volatility, you'll benefit. But I've also got some defensive positions where in case the market does pull lower, I can benefit from that as a hedge. So I suggest you contemplate this and at least think about ways to protect yourself. It also affects how your clients behave too, because this is something that will impact their behavioral characteristics as well. Now I have here Turning Japanese. That's an old song by the Vapors. You know, I really think so, because in Japan, they were trying to create inflation forever. They couldn't do it. We're trying. We can't do it. It's QE, QE, QE infinity there. We had QE1, QE2, QE light, QE3. It appears now we're on a path to QE infinity, supported by quantitative easing and something that we call yield curve control. It's already happening, team. They haven't announced it. They did it in the 1940s. They're doing it now. And this is important for you to know, because the Fed is just plain out lying. If you look at everything the Fed says, they said they're buying $40 billion a month in mortgage-backed securities. Bullshit. They're buying $100 billion a month in mortgage-backed securities. They're buying almost unlimited amounts of treasuries. They're monetizing our debt. It's what they have to do. It's what they will continue to do. And this is a form of yield curve control. They will essentially, and at some point maybe officially announce, that they will keep yields on the 10-year, on the 30-year, at a specific level, and they will buy an unlimited amount of bonds and notes in order to maintain that level. What does that mean for us? It means the rates are not going to run away from us. There's a lot of foolish people out there that we hear all the time forecasting rates to go much, much higher. I'm hearing people like Jeremy Siegel saying, oh, the 10 years going to go over 3, mortgage rates are going to go over 5. Don't believe that, team. That is not going to happen. So why? They don't understand the concept of debt and the effect that debt has on interest rates. That's really important. Let me just talk to you for a minute here. Where debt comes into play is that it slows growth. So, okay, interest rates. What impacts interest rates? The number one driver of interest rates is inflation. Why? Because inflation over time makes things cost more, which hurts or erodes the buying power of a fixed investment return, like a bond, like a mortgage. Think about it. You gave me a mortgage. I'm paying you $2,000 a month as my monthly payment for the next 30 years. Now, today, that $2,000 buys you a shopping list of goods and services. You go put it right down the list. You get your stuff this month, next month, the month after, but then over time, you realize you can't get everything on that list. My money is not going as far. The buying power is eroding because inflation makes things gradually cost a little bit more. So you can't get everything for that same $2,000 a month. Now, that's what you anticipate today. But what if inflation started to accelerate? Well, your loss of buying power, that erosion happens more rapidly. How can you defend that? You can't do anything with the mortgage you gave me. I'm done. But on the future mortgages that you do, what you're going to do is you're going to say, I got to protect myself from that more rapid erosion. I got to start from a higher perch. How do I do that? I got to charge a higher rate. Now you know What the vast majority of your competitors don't know is what drives interest rates. It's inflation. And influencing inflation is economic activity and growth. As economic growth continues to improve and does well and starts to spike higher, prices go up, causing more inflation. Think about the housing market. A lot of people want to buy homes right now. Not enough homes causes prices to go higher. There's inflation in the housing market. These are things that we have to contemplate because as economic activity improves, you will have inflation increase, and that will push rates higher. But on the other side of it is debt. Debt will influence economic activity. The more debt, slower the economic activity. Most people don't understand this concept. Let me give you an example. Take a family who wants to buy a nice car. They go out and they shop and they want to buy a nice car. Now, remember when we were kids, you had to save up your money to buy something. So you'd save, and then you break your piggy bank. Now you got enough money, now you can get it. Well, we grow up, we don't want to wait anymore. We don't want to save anymore. We want instant gratification. I want it now. So what do? You buy it on credit. So that family that buys the nice car on credit, what they're really doing is taking a future purchase and accelerating it forward. And instead of saving for it, they're going to pay it off plus interest. So that family buys the car today. When they do, boom, creates some economic activity. You've got the manufacturer makes money, the dealership makes money, the salesperson makes money, they spend their money, they create economic activity. And once that wears off, what remains behind? The tab for it. And the tab for it is that family now has for the next 5 years, $900 a month less to spend on economic activity. Multiply that across the board, and you see a slowdown in economic activity based on debt. Now, it really comes into play when governments do this. As governments increase debt, thank God we are not printing money. People say printing money, we're not printing money. We're borrowing money. When we do all this stimulus, when we do all this stuff, what happens with the stimulus is we don't have the $1.9 trillion to put out there. So what do? We borrow. How do we borrow? We sell treasuries. Sell it to you. It's in your 401ks, your IRAs, your mutual funds. You guys are funding all this stuff. So as that money comes in, now the government has the money to put out the stimulus, but what they're left with is for the next 10 years or 30 years, they have to make interest payments on this debt. And that slows the amount of money that they have to put into the system. Let me show it to you in action. So in the United States, the way it works is something like this. This goes back to 1950. So as the pink line is debt, as debt goes down, hey, we got less debt, that's more money to put into the economy. Spikes economic activity, interest rates in blue rise. As debt goes up, that's less money, interest rates decline. And we really go crazy here, and that pushes rates much lower. It's not just the United States, it's Germany, it's China, it's France. That goes up, rates go down. It's Japan, that goes up, rates go down. UK, that goes up, rates go down. Italy, that goes up, rates go down. Everywhere in the world, every period in time, this is a concept that most people don't understand, but now you do. This has helped us make some really good calls in the interest rate environment. And the debt is not going away anytime soon. Interest rates are going to remain low because they're pressured by the debt and technology, making things faster, cheaper, easier. That's enormous inflationary pressure downward because technology improves everything that we do and subdues the effects of inflation, keeping it lower. And I don't see technology slowing down anytime soon. Moore's Law, where it doubles every 2 years, we are seeing more and more technological advances that will continue to pressure inflation. That's why I don't see interest rates getting out of control. Now, that said, we do have to worry about a couple of things. Our labor force right now is down about 10 million people. Now, everybody is out there saying, oh, you know what? When we go back to work, we're going to get all kinds of economic activity. We're going to get all kinds of inflation. Rates are going to go crazy. Rates are going to rise. They're wrong. Here's why. Because those 10 million people out of the workforce, even if half of them come back, that will not cause inflation. That will help inflation because what they will do is alleviate supply chain disruptions. These people are not working right now. So we have workarounds to figure out how we're going to get supply out there. That's causing goods to cost more. If there's any inflation right now, it's in the goods sector. So if you look, here's an example. Remember when you couldn't get toilet paper 9 months ago? You'd pay anything for it because the supply chain was disrupted. You need toilet paper. And so what you're going to do is you're going to pay more. That's inflation that's caused by a supply chain disruption. When these people eventually, God willing, take the masks off, go back to work. And how close are we to that? Well, Statistically speaking, right now in the US, you've got a little over 100 million people that have antibodies because they've had it. You've got another percentage of the population that have received the vaccine. So you're currently somewhere around 35 to 40% protected. As you get towards 70%, we're inoculating 1.3 million people a day, 75%, that's called herd immunity. The virus really slows down. So depending on where you are, depending on the government, the state government's beliefs, you will probably see a much greater return or feel like it's being normal. The masks will start to come off. Now, there's going to be certain areas where they want complete command and control. You probably will see much tighter areas where they won't relinquish that, and you'll probably be under restrictions still for a while. But I think when you hit May, not that far off, 3 months from now, June maybe, we should really start to feel back to normal. Some of the masks come off, people go back to work. So what I think is rates improve, don't get worse. I know everybody else is saying they're going to get worse. We see them improving. Now, additional spending, like you've seen, that's going to increase the supply of treasuries to be sold. That's what's happening right now. That's giving up some bump up in rate. The Fed is going to monetize that. They will not let that get out of hand. When we see all this occur, what we are seeing right now is a temporary move up in rates. And by the way, those of you know, a lot of you are MBS Highway subscribers. You know this. You know that we've said this. We said this in the updates. We said last October and November, expect to see rates push up at the end of the year of 2020 toward the beginning of the year 2021, but then we saw them cycling back down. So the first half of that prediction is coming true right now in spades. We think we will get that second half of the prediction right, which is rates come lower. So rates likely to bump higher before resuming that downtrend. Now we know debt slows growth, it lowers inflation. How much debt do we have? We got $28 trillion in debt. You probably become a little bit immune to the term trillion, but trillion is an awful lot of money. How much is a trillion? What if I told you you got $1 million and you've got to spend $1 million today, and you got to do it tomorrow, day after day after day after? How long, how many days would it take for you to spend it? $1 trillion. We got $28 trillion in debt. Would it surprise you that the answer is 2,700 years? If you would have started to get there today, you would have started in 700 BC to get to $1 trillion. This is an enormous amount of debt that we are dealing with. And of course, she's back. Janet Yellen, a lousy Fed chair. Let's give her a shot at being Treasury Secretary. She did a very poor job as Fed chair, so let's give her another job. Now, Janet Yellen's influence will be everywhere, not just her autograph on all of the money that's printed, like every Treasury Secretary, but Janet Yellen is now going to have an influence very different than the last Treasury Secretary we had, Steven Mnuchin, because our Fed chair, Jerome Powell, has lost his mind. He wants to buy everything, monetize everything. Okay, you're buying bonds, you're buying MBS, you're doing this, you do that. But he's also wanted to buy and was buying bonds of McDonald's, bonds of Apple. Apple, the most valuable company in the world, $400 billion in cash that they don't know what to do with. They could buy countries with it. Have you seen their stock price? He needs to help Apple. He's lost his mind. Steven Mnuchin kept him in check. This woman, she's going to be, you're not doing enough. She is crazy. So what's happened? If you're an MBS Highway subscriber, we told you exactly what was going to happen before, because the morning she was appointed, we're going back now into November. We said, watch, the dollar's going to tank, and it did. Rates are going to go up, and they did. Gold was going to go up, and it did. Silver is going to go up, and it did. And we told you about Bitcoin going up. And I don't have to tell you what's happened since then. Why? Because people don't have faith in paper money, in US fiat currency, because with this woman there, she is debasing it. Now, she's debasing it so fast, she's doing it where other countries have not kept up. We're starting to see the effects of how other countries keep up. And what they do is they tend to buy our treasuries to stabilize our currency. They take their money, put it into dollars. Anytime you buy more of something, it makes that currency stronger. And that is what we are seeing. We saw it in the auctions yesterday, the day before. And what you're seeing is we're going to get some interest rate support by a lot of the foreign buying that's out there. So old Yeller is someone we have to be careful of. If she were not our Treasury Secretary right now, you would be looking at the lowest rates in history right now. But she is the one who's preventing that because she was, by debasing the dollar, importing inflation. And you know what's really so comical is all of her first speeches, she's talking about, oh, we've got to worry about the discrepancy and inequalities in earnings and the wealth gap. She created the wealth gap. Her and Ben Bernanke created the wealth gap because they talked about it all the time, pull up all their clips. The wealth effect, the wealth effect. What's the wealth effect? TINA, T-I-N-A. There is no alternative. giving people no place to put their money by purposely, willfully punishing savers so that you don't save money. You take your money. You cannot get a return in the bond market. The only place to go is the stock market because they said this. Ben Bernanke said this too. Want to push stock prices higher, make people feel wealthier, and then they will spend more money. The only problem with that is not everybody was in the stock market. So those who were in the stock market benefited. Those who were not able to be in the stock market were left behind. Hence, you have the great wealth gap. I wanted to hear her talk about it when she created it. Now, you have something very important for you to understand because when you take a look at the Fed funds rate and mortgage rates, we have to know they're different things. Now, you've seen a bump up in rates. So you're going to tell your customer, yeah, the rate's higher than when you talk to them a while ago. They're going to be scratching their head. What do you mean? What do you mean? The Fed's at zero. The Fed said they're not raising rates. The Fed's going to stay at zero for 3 years. Blah, 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 blah. How do you explain that? Well, if you show them this chart, you can see over the last 40 years, okay, you can see the mortgage rates in blue. Look at this, 17% mortgage rates. Wow. Mortgage rates here, and in red, the Fed funds rate. Now, over 40 years, they seem to trend similarly, but your client does not have 40 years. They might have 40 days to lock in. So look at the disparities in between. Look, there's period of times where the Fed funds rate goes up, mortgage rates go down. Fed funds rate goes down, mortgage rates go up. And this happens over and over and over and over again. But here, under Ben Bernanke, under Janet Yellen, they pushed the Fed funds rate to zero where it is now. So we've got some history here. Now, mortgage rates did not remain stable. Look at this. In a short period of time, in a 3-month period, here, mortgage rates went from 4 1/8 to 5 1/8. Here, they went from 3 1/2 to 4 3/4. In 3 months' time, could you imagine that? You probably remember it. You lived through it. But what if that happened today? Could it happen? I don't think they will go up as much, but there will be periods of time where you can see rates move higher. So this is why your client can't be cavalier, can't fall asleep at the wheel. And over time, we see rates trending lower, but it doesn't mean that within that 30 or 40 days they have to lock in, that it's going to be in a straight line lower. There could be a 30 or 40-day period where rates bump up, and we have to make sure that they're on guard for that because over time, it might take 3, 4, 5 months for them to get back lower, but they will go lower, we believe. However, they're going to be interim periods. Look, imagine an escalator that's heading down. And on that escalator is a kid with a yo-yo bouncing that yo-yo up and down. The yo-yo's interest rates. So there'll be periods of time where it could be higher for a short period, but over time, even if it's going higher and lower in the kid's hand, overall that yo-yo or interest rates will eventually be lower. Now, you know we made a lot of good predictions on rates. You know that in 2019, we called for a recession. Everybody thought it was nuts. People made fun of me. But yes, we hit a recession in February of 2020 before the lockdowns. And in January, we hit the low on the 10-year that I predicted at 1%. When I made that prediction, no one believed it. And the reason I'm bringing that up with you right now is because all the things that I'm showing you, it's the exact systems and methodologies that we've used. I'm bringing you behind the curtain to see it so you can understand why we believe that this will lead us to, while there'll be some bumpiness, low rates. I don't know if we're going to go all-time lows, but you're going to be in a really good position in rates. And you have to also understand this. Listen to me. Right now, 55% of all mortgages are below 4%. That means like 3 1/8 is an important trigger because you need about 3/4% benefit for many people to refinance. So what that means is if we see rates, even if it's a short period of time, get above 3%, you're going to be in a position where you're going to lose right now 71% of applications, 71%. Even if it's not you doing 71% of applications as refis, your competitors are. And what are they going to do? They're going to try and impinge upon your business. And all these public companies right now, you've got SPACs, you've got IPOs, they're loaded for bear for a price war. They want to make this a commodity business. The only thing that you can do is invest like you're doing right now in your brain, because that's the only advantage you have. You will not win a price war. You can win an advice war. What you would be able to do is, but you can't give what you don't have. You can't bullshit this. You have to put in the time, put in the training, put in the effort for you to be able to do this. And what I want to share with you is just where we went with this. So here we go here. I want to pull back my screen and show you that based upon this stuff, once we hit 1%, you said, okay, where are rates going now? And of the many of the interviews, I pulled this one because it showed my call. I said we're going to a 0.5% on the 10-year. They thought I was nuts. If you pull up the clip, they said, we want to debate you on that. Sure enough, shortly thereafter, we hit exactly 0.5%. And if you look it up, the call for 0.5% was exactly the bottom of rates. We believe that this is where we're going to be going, team. I think that if you if you look at the opportunities that you have in front of you right now, it is going to be really important that you change your focus. And I want to just share one quick story before I stop here. I've got like 2 minutes, so I'm going to make this brief, and then I'm going to stop. Focus is important. Right now, so many of you are focused in your business, but you have to focus on your business too. I think it's so critical right now because look, you've got the lowest rates ever, practically, along with a really the hottest real estate market ever. That's never happened. Usually low rates, slow economic conditions, real estate's not doing good. Think about 2009, right? 2008, low rates, but the real estate market, was struggling. You have both at the same time. That's rare. But in addition to that, more equity than people have had in their homes. Back in 2009, everybody was upside down. Here, the average LTV on a home is 50. $200,000 is the average amount of equity people have in their home. You've got the jackpot. If that weren't enough, you're coming off of 2020. So God willing, hopefully you've got some money that you can now invest, tools, systems, things to put in place, like MLO Masterclass. What you really need to be doing, team, is thinking about this. There's 3 ways to make money. There's 3 parts of the selling aspect of your business: prospecting, actual selling, and follow-up. One is critical. You only make money in one. The only way you make money is selling. So that means that, are you putting in the systems and automation into prospecting? Are you doing it with your follow-up? Are you maximizing the sales process when you're interacting with people? Because the narrative people want right now is they want this narrative to be, it's all about price, lowest price, fastest capability. But that's the narrative they want. From the customer's perspective, what we have to teach them is that while that payment might be the same, it's going to affect every family differently. The program you choose, the way that you're going to structure the amount of down payment, your advice becomes really critical at this point in the game. You have to be well trained in that. It's going to be hard for us to just fluff our way through this in the future. We have to make sure that we are truly at the top of our field and masters of our craft. Now, team, last thing to say is that I learned a lesson on the track. I like to drive on the track. I have a track appointment actually on the 16th of this month with a professional driver. I really like to learn. I want to be a good driver, both on the track, but really on the road, which is much more important. And one day, my instructor, while I was a previous lesson, by the way, this is all in my book, Money in the Streets. Hopefully you got this book. It's a really good book. Some of you have been talking about it, and I appreciate that. This lesson was really important. My instructor sees me kind of looking at the car in front of me, and he goes, I noticed, Barry, that you look at the car in front of you a lot. And I was like, okay, I really didn't notice that I was doing it. He says, don't worry, 99.9% of drivers look at the car in front of them a lot. He says, the thing is that you need to change your focus. You need to look much further down the road. When you do, you'll be able to see bad things before they happen. You'll be able to see, if you're driving on the track, where to position yourself to be fast through the turns. And so the thing of it is that most people look at the car in front of them, and when they do, you're really depending on the person in front of you's reaction time rather than seeing it even before they do. And he saw me thinking about this. He says, look, pull over. I pulled the car over, had a bottle of water. He says, take your bottle of water. I put my bottle of water down on the ground, stepped back about 20 steps. But as I looked at that bottle of water, he said, okay, look at the bottle of water. Can you read the sign down the road? I said, no. He said, now look at the sign down the road. Can you still see the bottle of water? I said, yes. He said, you see, that's what I mean. You can still see what the car in front of you is doing. Now you'll be able to see everything down the road. I said, wow, change your focus. You do that behind the wheel, and you should, by the way, everybody. You become a much better and safer driver. If you do that in life, you can't help but be much more successful. You see, team, here's the thing. It's when we look at our business, if we're working on our business, we're looking at the car in front of us. And if we're looking in our business, we're looking at the car in front of us. Working on our business, we're looking down the road. In 1955 in San Bernardino, California, there was a great burger shop that was really, really bumping. It was amazing. And if they said, we're too busy to invest in our mind, to do stuff, to hire additional people, they would still have a great burger shop, but they wouldn't have an empire. That business was McDonald's. They chose to look further down the road. They chose to change their focus. They chose to work on their business. And that's what I want you to do. Because I want you to protect yourself. There's a lot of things coming down the pike that I see that worry me, that trouble me. And I don't want us to go by the way the travel agent, the stockbroker who's been decimated, cab driver, all these industries, they're coming after you. Protect your family, protect yourself, and have enormous growth and success in the future. Simply change your focus, invest in your mind, invest in the tools, invest in your team. This is the time. What better place do you have to put your money than in yourself? Team, thank you so much for your time today. Are there any questions you want me to just address very quickly, guys? And want to kind of go through that. Megan, is there anything you want me to say? I haven't been a chance to look at the charts there.
Yes, so there
Great.
has been some questions here. This is an interesting one that I know we talk about quite frequently. What is your perspective on short sales / foreclosures, and when and if they will hit the market?
They're not going to hit the market. There's not enough inventory. There is just, things are changing too. People, homes are selling too rapidly. And don't worry about the forbearance thing, because the forbearance, there's no bill to pay. When you come out of forbearance, some people didn't have to go into forbearance. Some people will be in a position where they're going back to work and they can pay it. But there's no bills to pay on forbearance. It rides alongside the first mortgage, much like a home equity loan or a second mortgage, but there's no payments. So therefore, the satisfaction of those will be very staggered. And there's too much absorption. There's too much equity to protect. It's a totally different story.
By the way, I know a lot of these people actually that are in this room are already MLO Masterclass members, and thank you so much. I mean, as you know, and I'm assuming you're all MBS Highway members, because this is like just a required service that you need to just to have that kind of education. But to be able to kind of maintain the kind of levels that you need, MLO Masterclass is the tool that gives you long-term planning tools and the strategies, not just the day-to-day program. We actually have a special offer that we have for all attendees that are here. You're going to be able to get a special discounted price, and also we're giving you a free trial, so you can get started, get instant access to these MLO Masterclass tools instantly.
Well, thanks, guys. Thanks, guys. I'm sorry. I know I ran like 3 or 4 minutes over time, so I apologize. But I'm going to stay on. If you have questions, I'll try and look at those as well.
Perfect.
And thank you for all the very, very lovely kind comments. It means more to me than I can possibly express. So thank you, and God bless you guys.
Please, everyone, go out and get this book. It is amazing, such inspiration, as well as, you know, tactical tips that you can use actually just in your life. It's not just, this is not just about the mortgage business. This is life lessons. It's a great book. So speaking of lessons, we've got Megan Anderson coming up next. So excited to have Megan on here. Megan's going to talk about social media and the marketing trends for 2021. Megan, take it away.
Thank you guys for having me. I am really excited to talk to you guys, and I'm excited. Normally I don't like to follow Barry because who likes to follow Barry? But I'm really excited because you guys just got intel about where the market is headed in 2021. And as you're going out there on social media and marketing your brands and your business, it's really important that we understand this, because it's going to change the type of content that you're making. So let me go ahead and let me share my screen with you guys. Oh, you guys, I can't share my screen.
Megan, give me a second. Let me reclaim host and then make you the host.
Okay, perfect. Thank you guys.
Fantastic. And so I'm going to put 2 things. I'm going to put a link to Barry's book, so you can grab it right off of Amazon. You'll be able to, you know, whether it's a physical book or digital book, you can grab it right away. And also, I just pasted the link so you can get the instant access to the MLO Masterclass. So just look in the chat, you'll see it.
Yes, and MLO is great. You guys talk about all the great information that you got from Barry and the information that you're going to get from here today. There are presentations and lessons in there from all of us and even more amazing people within this industry. So there's a lot to learn within MLO, and definitely take advantage of that 30-day free trial. You have nothing to lose. So just go ahead and take advantage of it. So let's talk about mastering social media in 2021. And I always get asked, you know, why social media? Well, social media is here to stay. You know, Barry has some very positive outlooks on COVID, and let's hope that that is the case. But there's also this other side. There's also this side of there's all these mutations. Are these mutations going to match with the vaccine that's coming up? And I bring this up because there's still fear. And we constantly are hearing companies talk about having this mix of coming into the office and also working remotely. So there's some level of this virtual world that is here to stay. And the fear that has been instilled with people, and it does take a while to change that behavior, I think it might be a while before they feel comfortable meeting up with complete strangers if they don't have to, especially until we reach that herd immunity level that Barry was talking about at the 75% herd immunity. And right now we're at 42 or 45. I don't remember the exact number that we got today, but until then, the virtual world is here to stay. And I think it's just becoming part of everyday life. So it's important that we master it so that we know how to talk to people in the way that they're communicating today. And I also get this, but Megan, I have been so busy. I do not need any more leads, so I don't need to worry about social media. Listen, social media isn't just about attracting leads today, you guys. It's about staying top of mind. So that client that you did a mortgage application for, you know, a few years ago, when their friend decides to come into the market and look for a home, well, you've been posting, you've been staying top of mind, you've been providing value. So now they remember to refer their friend to you. Now that might be, you know, 2 years down the road. So it's not about getting all these clients right now. It's about staying top of mind and bulletproofing your business and getting that volume in the door continuously. Now, let's talk about COVID's effect on social media. And according to a Harris poll, now they took these every couple of weeks, and there were a few thousand people in this study. They found that between late March and early May, 46 to 51% of US adults were using social media more since the outbreak. And this is across all age groups. Ages 18 to 34 up 60%, ages 35 to 49 up 64%. Even 65 plus saw an increase of 34%. And another study that I was reading said that people on average are spending 1 to 2 more hours a day on social media. And again, that makes sense. A lot of us don't feel comfortable going out at this point in time. So social media is how we're interacting and how we're getting that sense of communication in this world right now. And another thing that is projected to go up is sliding into those DMs. That is right. We have seen an increase in social media messaging, and this is projected to continue to increase throughout 2021. So these are all reasons on why we want to be utilizing social media. But when it comes to utilizing social media and the content that you're going to be creating, the first thing to understand here is your target audience. And the target audience is who you're trying to capture with that specific piece of content. And in my eyes, there's 3 different types of target audiences within the mortgage realm. First off is that area of expertise. So are you the person in the office that everyone is coming to ask questions about reverse mortgages? Well, that might be a target audience for you. And then there's those passion clients. These are the clients that no matter the headache, no matter all the little fires that you have to put out, at the end of the day, they leave you feeling this is why I do what I do. Maybe you really love helping first-time home buyers. Maybe you really love helping recently divorced women find a home. Whatever the case may be, that would be one of your target audiences. And then the third one is, what is the market giving us? You know, in this past year, the market has given us a really wonderful opportunity for refinances. But what's in store for 2021? Well, market outlook matters. It really matters because it's going to determine the type of content that you're going to be creating in the future to help bulletproof your business and articulate and talk to the client, importantly, about what's happening in today's market. And, you know, MBS Highway, we keep you covered with this. We come out with a morning update video every single day, myself, Barry, Dan. We read the articles for you. We interpret the housing reports that are coming in, and we articulate that in a short video for you so that you can stay up to date on what's happening now, and again, what's happening in the future. And not only is this going to help you with social media, you guys know this. When you feel confident you become magnetic. And this is something that Barry talks about in his book as well, is becoming magnetic. But when you put in the work, you be that forever learner, it's going to help you in so many different areas of your life, not just content and social media creation and mastering social media like we're talking about here today. So where's the market headed? Well, Barry gave us a really good breakdown and explanation, but knowing this is going to determine the kind of content that we're going to be creating this year. So first off, we know that it is shifting to more so of a purchase market. You know, we have seen the past couple housing reports, we've seen those refinances, that refinance volume come down. Now it's still making up a very large majority, 71% of total volume. But you guys know this, there's been a lot of people in the market. Of course, there's still a lot of people that could refinance, but Barry just got done showing you the 10-year, where the 10-year is at today. And for those of you that asked, the 10-year moves in the same direction as rates. So as the 10-year goes up, rates go up. As the 10-year goes down, rates go down. And in the beginning of COVID, there was a huge year-over-year difference here. But as we start to look at it, and as Barry broke down for us, we're getting to the point where rates a year ago were actually going to be lower than they are today. Now, still the trajectory that we have here at MBS Highway and Barry has predicted is that rates are going to continue to stay low, but we will start to see kind of, you know, a back and forth motion here. The other thing that we know going into 2021 is that first-time home buyers are going to be increasing. When we take a look at the birth rates, and this is in history, it's already baked in history, it's already happened. But when we take a look at the birth rates year per year, and we take the average age of a first-time home buyer, which according to Zillow is 33, and we go back 33 years, well, we see that the number of first-time home buyers age group, those 33-year-olds, there's going to be more and more of them coming into the market for the next 3 years. Now, it's not going to drop off after that, so you don't have to worry. It's going to stay at high levels of 4 million births per year. But it's important to know this because, hey, if we know that a lot of first-time home buyers are going to be coming into the market here, well, maybe we want to focus some content creation on that. And the next thing we know for 2021 is that it's going to remain tight inventory. You know, during COVID, builders weren't looking at land, they weren't building, they kind of put a pause on things, not to mention the year over year change in lumber price. Last number I checked, that was up 140%. So it's getting more expensive to build those homes as well. So tight inventory is something that we're going to have to be dealing with, but we also know that there's going to be strong demand. So what does that mean? Well, that means really great appreciation. So maybe we want to create content that articulates that to our clients. Now, as far as low rates go, you guys heard Barry talk about this, but another thing that I want to mention is a few days ago, we heard the Fed Chair Jerome Powell speak. And he said, due to misclassification, while the BLS is reporting that the unemployment rate is around 6.3%, in reality, it's closer to 10%. And knowing that, they're not going to come in and they're not going to raise rates dramatically. So we know that rates are going to remain low. And not only that, but Barry showed you those debt levels. And if you take a look at how debt levels correlate with mortgage rates in literally any country, it's the same. As that debt increases, rates decrease. And Barry broke that down really nicely for us. So now that we've gone over that, let's really focus on this content creation. So we want to focus on content that is going to be, you know, purchase market focused. And you guys have access. I know a lot of you guys have MBS Highway, but we have a lot of tools in there that can be really helpful, not only during the sales process, but hey, you're doing this anyways. So why don't you turn that into social media content? One of these pieces that really does focus on that purchase market is this loan compare, where you can come in and answer the question, what loan is best for that client? And listen, I don't understand how you guys do it sometimes. Growing up, my mom was an originator, my boyfriend's an originator, and I overhear these conversations, and I've overheard them for the past 20 some years of my life. And you guys get the clients that are like, well, what if I do that, then that's going to do that to my APR. So maybe I don't want to do that, but can you write me up an application for this option, this option, this option? And you're like, no, Well, when the client starts asking that and they start getting like that, go into MBS Highway, pull up this tool and help them, ask them the questions, direct the conversation, and you'll be able to articulate to them what option is best for them. You'll be able to show them how this evolves over time to really help them make a good decision. And again, you're doing this anyways. Use this content, use this piece that you're already doing to create content for social media. Now, another one that we could focus on is buy versus rent scenarios. That would be really great to kind of focus your content in that direction. And also we have a tool on MBS Highway called the Real Estate Report Card, which shows the health of the housing market within the county or zip code that the client's looking to purchase in. Those are really great talking points. Great. Turn some of that into a video, turn that into content, post it and get it out there. Another thing that you guys are going to want to be focusing on in 2021 is building those referral relationships. Reach out to them. I feel like during this crazy time where everyone was busy, and if you've been doing a lot of refinance volume, well, make sure that you're focusing on building those relationships, because that's really going to matter here in 2021. And again, there's tools in MBS Highway that you can use to help them. One being, sending them an open house flyer kit, widgets so that you guys can attract leads, and helping them with those clients that are maybe getting fatigued a little bit due to that tight inventory. And again, create content around this. One of these that I mentioned is this cost of waiting piece. And we have this here in MBS Highway. And let me show you how you could use this to create content. So what this piece is explaining to the client, maybe this client's getting fatigued, they haven't been able to find a home, and they say, you know what, I'm just going to wait. Well, the thing is they don't really know what they don't know. So let's make sure that they know, okay, Mr. and Mrs. Client, it's fine if you want to wait. But if you are going to wait, due to the fact that that home's appreciating, well, it's going to appreciate. It's also going to increase your loan amount. It's also going to increase your down payment. And rates right now are at historical lows. Who knows what they're going to be at in the future? But listen, if you're going to wait a year, due to that home appreciating, it's going to cost you an extra $160 a month. But that's just the beginning. You're also going to miss out on property appreciation and amortization. That 1 year is actually costing you closer to $26,000. Are you sure you want to wait? Maybe you want to come in above asking price. Maybe you want to keep looking. Take these pieces that you're already using, film a video of it, and put that on social media. That's going to be extremely powerful for the market here in 2021. And then create content that is going to showcase that financial opportunity. Right now in the media, everyone is just hearing this affordability crisis. Homes are so expensive. We break that down in MBS Highway on why that just is not the case. But again, we also have pieces in here that can help. For example, we have a bid over ask tool, which is really powerful. It's really going to help your referral partners as well. So talk about, solidifying those relationships. Well, right now you have to win a home in today's market. So why not create a video on social media using this piece, talking about, hey, are you searching for a home right now and you're getting a little bit discouraged because you can't seem to find anything that matches your needs? Well, right now, nationally, inventory is really tight, but there's a financial opportunity that exists here. So if you found the perfect home and there's other bids on it and your agent is telling you to come in above asking price and you feel uncertain, well, let me show you what I have access to that can really help you. Walk them through the piece and then say, hey, I'm Megan from XYZ Mortgage. Reach out to me and I would love to fill this out for your specific scenario. Utilize what you're already doing as far as this content creation, but focus again on where the market is headed. And that's going to help you protect your business and communicate with people in a way that is what is happening right now. Now, I always get this question as well. What platform is best? Well, it all goes back to that target audience. So what I actually want to do is I want to do a little exercise here. I'm sure you guys have been taking notes because I have during this, but I want you to get a piece of paper and I simply want you to divide it into 3 columns. And we're going to define your target audience right now. So remember, the first target audience is an area of expertise that you have. Maybe it's reverse mortgages, whatever it is, go ahead and write down your area of expertise. The next target audience are those passion clients, the clients that at the end of the day, they give you more energy than they take from you, and they make you feel like you have a purpose in this world. Go ahead and write that down as well. And then the last target audience, we already know. We've been focusing on what the market is going to do in 2021, and that's what we need to focus on. So now that you know what your target audiences are, this what platform is best? Well, it's going to become a lot easier to answer. If you answered on your area of expertise that you're in reverse mortgages and that's one of your target audiences, well, if you wanted to be on Instagram, I would be telling you that you'd be wasting your time, because that older demographic, they're more so going to be on Facebook than they are going to be on Instagram. Now, if you're focusing on, first-time home buyers, well, then Instagram is going to be a great place for you to go, because that younger generation isn't checking Facebook as frequently as they were 10 years ago. Now, what also comes into play with picking the best platform is what type of content do you like to create? I don't know if you guys have been on TikTok, but TikTok, it's a lot of pointing, it's a lot of dancing, it's a lot of funny, humorous content. If that's you, then by all means, go ahead and be on TikTok. If you feel a little uncomfortable still showing your face, but you still want to get out there, then maybe you want to go on platforms like a podcast, or maybe you want to look at Clubhouse, where you can have conversations with people, but you're not necessarily having to show your face. Now, still, you're going to have to get over that at some point in time, but I do find by just getting out there and doing it in some form or fashion, you're more likely to kind of overcome that. Now, do you have to do video? Well, no one's saying that, we're going to do bad things to you if you don't do video. No one's threatening you here, but you should be doing video, because again, in this virtual world, it can be really hard to build connection. Well, when I see someone's face, obviously, if I'm in person, it's a lot deeper of a connection. But if I see someone's face, I already start to know, like, and trust them a little bit more. And it positions you as the trusted advisor. So don't shy away from video, completely embrace it. And listen, we don't all pop out of mom's womb and say, get me behind a camera, I am ready to go. No, this takes practice. And again, MBS Highway is here to help. We have a tool in here called Social Studio, which turns your computer screen into a teleprompter, and we already have scripts in there. Everything from what's the difference between a pre-qual versus a pre-approval, to this affordability myth, to when the Fed cuts rates, it doesn't mean your mortgage rate. And if you can read, you can create videos for social media. And doing these is really going to help you feel more confident and comfortable, because the second that you start getting traction, or that you helped someone, that makes it all worth it. And then we kind of get out of our own way. So what is it going to take to master social media in 2021? Well, first off, it's going to take consistency. Listen, this is a long-term game we're playing here. You can't treat it like your New Year's resolution and trying to get in shape. Ask yourself, how's that working out so far? For 90% of the people, it was looking great for 2 weeks. They were going in the gym every day. They were feeling good. And then maybe they hit a point where it was like, oh my gosh, my body's so sore. I can't even function right now. And what is it now? Well, maybe they haven't been in there for the past 2 weeks. But what I have noticed is that when we start small and we build upon, it's more likely that the behavior is going to stick. So ask yourself and start off really easy. What can I be consistent with for a month? Make it really easy. If it's every Monday, great. Once a week is fine. If it's twice a week, great, do that. Make it so simple that it would be hard for you not to achieve it. And then after that month time frame, you're going to start to have more confidence in yourself. You're going to be like, yes, I was consistent for a month. I think I could do this now. I think I got the game of this. I think I could post, 4 times a week now. Start to slowly build upon it. Next, if you're going to be successful in mastering social media in 2021, you have to understand the market. Take a free trial of MLO. Get in here, try this out, get more information. It's free. You have nothing to lose. Watch the MBS Highway Morning Update video every single morning. Do whatever you have to do to get that knowledge. Be that forever learner. And then understand your target audience. Really break it down. We already have this list going here. What I'm going to encourage you to do after this event is stop everything for 5-10 minutes. And I want you to sit down and I want you to write down for each of those 3 different target audiences, what are their problems? What are their questions? What are their concerns? What are their emotions? And doing this is going to give you an idea of the type of content that you can create. So if one of your target audiences is first-time home buyers, well, what are questions that they have all the time? What is the mortgage process? How much of a home can I afford? How does this work? Am I going to be locked in this long term? What happens if I decide I don't want this house in a few years? They have all these questions. Now, what about their emotions? Well, they might be excited. They might be nervous. They might feel like this could be a bad decision. Break it down. And by doing that exercise, it's really going to help you understand your target audience so that you're better able to create content that speaks to them. And then you'll become magnetic and attract more of them. And the last thing, it's to get out of your own way. It's really important that we get out of our own way. A lot of the times people have fear. They have this judgmental voice, especially when it comes to social media and putting ourselves out there. You can't let you get in the way of you. You have to put it aside. You just have to get over it. And just let all those insecurities go. And I'm telling you, when you become consistent and you do this over and over, you'll start to gain traction and you'll start to feel more comfortable and confident in yourself. Don't sit there and judge yourself. You've got this. Now let's go ahead and let's master 2021.
Oh my goodness, fantastic. Some just great feedback coming in from the room. Really, really appreciate just amazing ideas, great content here. And of course, we've got the legendary Khai McBride coming up. By the way, like this just doesn't have to be right now. You can get access to Megan, Barry, Shashank, and Kaya by getting access to MLO Masterclass. I'm going to actually repaste the link in next to the chat box. But without further ado, Shashank, if you could do me a favor and just make Kaya the host so he could do some screen sharing so we could see some of his magic.
I didn't eat any caffeine this morning because Barry and Megan just amped me up. I don't know if I can talk as fast as they do, though. I'm going to try to keep up with them. So I have host here, Shashank?
You're the host.
Okay,
Awesome.
I am the host. All right, I'm going to share my screen right now. I think everybody can see this, right? Okay, we're going to talk about structure and scalability today because if I've heard one thing all year, and hang on, I just need to move my camera here so I can look at myself so I'm not turned sideways. If I've heard one thing through all of 2020, it was just people were dying. And here's the thing, 2020 gave us everything we wanted. It gave us everything we wanted. It gave us low rates. It gave us a ton of loans. It gave us, purchase business, refinance business. Everybody flipped out, but everybody also went crazy. And that's the crazy thing about it. It's like, think about the times 2019, 2018, 2017, when you're just sitting there saying, if I could just get some more leads, if I just had some more business, and here comes 2020, and it gave you everything. And guess what? No one was prepared. And that's never what you want, because it's like we train for this, we prepare for this, we want this. And then when it comes, you look at yourself in the mirror and you say, I wasn't prepared. And here's the thing about the mortgage industry. It comes in cycles. I started in 2001. There was a huge refi boom. It went all the way through, it kind of petered, and then it peaked again in 2005. Then we went through the crash, 2008. I remember 2009, I was doing 7.5% purchases. And so if anybody complains about 4%, 3%, 3.5%, remember I was doing 7.5% purchases in 2009. We don't even have to go back to the 80s. Then 2014 came, finally, another small refi boom. Then 2016, and then there was a little bit of lull. And then we hit 2020, which was probably the biggest, not just refi boom, but purchase boom ever. It's causing just everything big and crazy. So the market is like that. It's up and down. You're going to get times of ebbs and flows. And it's crazy because you always feel it's feast or famine. You're either getting too much or you're getting too little. The problem with feast is you have too much business, too many hours, and stress. I know most of you right now are just working crazy amount of hours. You're doing more apps than you want to. You haven't seen your kids, you haven't seen your family. You're working weekends, you're on your cell phone all the time. And then you've got famine where there's not enough business and they're both stressful. And this is the mortgage industry and it's cyclical, okay? And a lot of times you guys feel like you're on this constant hamster wheel. And I always ask people this question: how many years have you been in the business? And somebody will say 10 years. And I say, really? Is it 10 years or is it 1 month, 120 times? Because after you fund out that pipeline at the end of the month, guess what? You got to start all over again. And everybody was excited when they got into the mortgage industry. Everybody was excited at the beginning of 2020 when all this business started coming in. It's like you felt like that Britney Spears, right? But then after a while, you turn into 2007 Britney Spears and you're just dying. And so how do we change that? It's about structure. It's about understanding how to scale. It's about creating systems and processes for yourself. And I'm going to break that down. So here's the dilemma though. There's this myth that, one second here. Okay. There's this myth that you can't have success without pain. So the more you do, the more business you want to have, the more work you have to do. And that's a huge myth. That's not true. Because think about it for a second. If you think about all the people in the mortgage industry, you've got people that are big producers, medium producers, even people outside of the mortgage industry, people like Elon Musk that are making billions of dollars a year. I mean, more or less, everybody works the same amount of hours. Think about it. So how does somebody do 300 units a year and work the same amount of hours that somebody's really pushing 80 units a year? Okay. And the other problem is that how do we do that without mediocrity? In other words, there's feast and there's famine, and they're the two extremes. So people say, well, what if I just want a little bit in the middle? It's balanced. But that's mediocrity for me. I think everybody should push to whatever their highest goals are in life. You want to do 300 loans, do it. You want to do 1,000 loans, do it. You want to own a mortgage company with 200 branches, you can do it. And you can do it with 40 hours a week, okay? So I'm going to explain to you why the mortgage industry creates the dilemma it does when it comes to doing more, and then what we can do to fix that. So there's this general understanding that if you're doing 1 unit a month, let's say you want to go up to 20 units a month, that you have to lead generate. It's always about lead generation, lead generation, lead generation, lead generation. We talk about it all the time. And lead generation is absolutely important. It's something that you have to do all the time, every single day, every single month. But here's the dilemma that all of you face. I call it the loan officer mountain. How many of you, when you started the industry, you're doing 1 to 4 units, and then as soon as you started hitting about 5 to 9 units, it just got a little bit harder. It's like you hit this wall. And then you start to learn to adapt. You get a little bit more efficient, maybe you hire an assistant or you have a half LOA, and then you slam into this other wall. You don't know how to get above 10. I hear people all the time, I can't do any more than 10 units because I'm at my absolute peak. But then there are people over here that are doing 10 to 19 units. Same thing though. They do this for a period of time and they will just slam into this wall and they don't know how to get over to 20. So how do we make the jump up to the different levels? Actually, the question is, why do we have these different levels? And here's why. I call it the rule of 7. What happens is that when you get a lead, you have to take time to pre-approve the lead. Then you have to qualify them. They become a shopper. They go out there and they're going to shop in this market. It could be 3 weeks. It could be 3 months. I mean, Southern California, it could be 9 months. Then they go under contract for anywhere from 30 to 60 days. And then the loan funds. Now, if you take one lead and wait for it to go all the way to funding, that could be 90 days. So we don't do that. We have to create a pipeline. So what we do is we create a pipeline of leads, shoppers, under contract, and fundings. And that's about 7. So to fund one loan, you have to have about 7 people in your pipeline. So think about it this way. To fund 5 loans, you need 35 people in your pipeline. To fund 10 loans, you need about 70 people in your pipeline. So then you deal with this issue that you're growing exponentially. Now, unlike other industries where, let's say, I can just order a pen, and it doesn't matter whether I order 1 pen or 1,000 pens. I just send the new order and I get a bunch of pens. But with the mortgage industry, we have to actually process, collect conditions, package, and do those loans. So we need more resources, okay? And this is the 4 stages of growth in the mortgage industry, where we go from infancy survival to the teen growing pains. And in order to get through this, you're going to need some help, 1 to 2 team members, until you can peak to the not peak, but move up to the adult level. And then you're going to have anywhere between 2 to 4 team members, 10 to 19 units. And then you finally peak to the big market leaders, the mature people with the 5 team members, the dominating market doing 200, 300 units a year, 400 units a year, 100 million a year, whatever it is. And so there is this succession. So I think the obvious thing is people say, let's add team members, but there's more than that though. And what we need to do is we need to figure out how to jump these gaps with some leverage. So the leverage points at each level are a little bit different. From 0 to 4 units, the key is consistency. So it's just your own consistency. And a lot of that has to do with just really simple things like time blocking, being consistent with your day, starting, doing the same things all the time, perhaps even trying to not do too many products and just working with your expertise in your products and in your market. Once you get to that, you're going to get into this team period. And for the first time, you're going to be really, really challenged because you can't function the same way you did when it was 1-4. So you have to create processes and you're going to have to start to build your team. It's your first LOA. Okay. Then from there, if you can make this smoother jump, if you create those processes, you'll get into this area. But now you're faced with some different challenges because this becomes exponential again. You're talking about 70 people in your pipeline, 140 people in your pipeline. So you have to introduce technology, more team building. And here's the thing, when you get to this point, you're managing, you're running, leading a group of 3-4 people, you have to be good at leadership. I've heard so many people say, well, my LOA is not doing this, my process doesn't get back to me on time. And it requires really good leadership, really good management in order to peak here. Okay, so to leverage up to these points, you have to focus on these things. Now, if you never hear me speak again, please read this book, The E-Myth Revisited by Michael Gerber. It was one of the first books that I was ever given by my mentor, Bill Hillestead, and it changed the way I thought about business. It talks about the myth of being an entrepreneur. There's a confusion that being an entrepreneur is the same thing as being self-employed. Self-employed is working for yourself, which means you have to do everything yourself. An entrepreneur is somebody who runs a business, that has a business with a structure, with a business model. So it talks about the story of a baker who's really good at baking. So she decides one day, I want to start my own bakery. But here's the problem. Here's the problem. She becomes a baker and she gets all these orders. She's like, oh, I'm an entrepreneur, I have my own business. But she realizes, wait a second, this is horrible. I'm just self-employed and I never do anything except bake. And I'm like the worst boss because I can't take any time off. So she starts to realize that in order to really have a bakery, she has to create recipes, and then she has to hire bakers, and then she has to focus on service, what the bakery is going to look like, and also marketing. Because if she bakes all day, she's going to go through these ebbs and flows of peaks and valleys where she's going to fulfill her orders, but then she's got to stop because her pipeline's dry, and then she's got to go out and get business. Now, you guys are more familiar with that in the down peaks. And in the up peaks right now, we're just getting a lot of business. But I think a lot of you are sort of sacrificing quality for that. Okay. So the key to wealth isn't hard work. The key to wealth is leverage. It's not doing the work, because right now all of you are bakers, like loan officers, doing all the work, and you're not leveraging people and processes and technology. So these are the 5 resources we have to our disposal that we can leverage. And you want to do it in this order: processes, technology, people, money, and time. Everybody right now is using the 5th resource too much, which is their own personal time. So everything that you do, you have to create a process for it first. The process can be as simple as a checklist. It could be as simple as a template. And from there, you ask yourself, what type of technology will automate this for me so that I'm not doing it manually? Okay. And a lot of technology is cheap. Things like Google Sheets, and even if it's not super cheap, but you got to work on getting a CRM. You have to look at what your marketing tools are, and then you bring on people. And what that does is that will save you time. And I put money forth because you try to get a lot of this free, but if you can, you got to dip into your money and then go back and pay for these things, okay? Or as little as possible. Now, here's what happens a lot in the mortgage industry. A lot of people think I just have to hire people. And they have a hard time hiring people. And I hear this all the time. My LOA is not doing things correctly. She's not, he or she, or my processor's not doing it right. It's because you didn't create processes for them. If you created processes for them, they can't fail at their job. People are meant to work perfectly given the systems that they're in. So if you create processes for them, you give them the right technology. Let's talk about my LOA and my processor, we're never on the same page. Well, if you have a CRM where you take notes, then everybody would be on the same page with notes. So that's another thing is people go out of order with resources. So anytime you're doing something, whether you're packaging a file, you're submitting a file, you're trying to close a file, even marketing, ask yourself, is there a process for this? Can I apply technology to automate it? And then can I ultimately delegate it to somebody? Now, Barry earlier talked about the McDonald's story. And if you want to watch a movie that's really fun, it's The Founder, about the McDonald's story of Michael Keaton. And you can watch it on Netflix. So McDonald's was, back in the day, they just had these restaurants, these cafes that you would walk in, you would order a burger, and then they would serve it to you. But Ray Kroc was a shake salesman, and he found this little burger restaurant. I think it's in San Bernardino, California, and it was McDonald's. And it was crazy because they had a better way of doing business. They actually invented the whole fast food system, okay? And their ability to deliver food fast, consistently, also created a completely new experience. Now, I'm going to say something about other lenders. I know a lot of times people talk about Rocket. We talked about some of the competing online lenders that we have, and are they good and are they bad for the industry? The reality of it is that they're good for the industry because this is what the consumers want. The consumers want to be able to get a loan on their phone because they're on the phone all the time, okay? It's just that right now, some of these companies aren't delivering on the back end the type of service that people are expecting. But that's the way the industry is going. So I would suggest that everybody embraces that and ask yourself, how can you adapt to these processes and technology that you can deliver to the level that the consumers are looking for? And that's exactly what McDonald's did. So the McDonald's brothers, they created the fast food concept, and they did it by going through a lot of painstaking exercises. There's a scene in the movie where there is a tennis court, and they drew all the little stations for the burgers, the fries, the ice cream, and then they simulated what it would be like to take a burger through the entire process. And if they bumped into each other, they moved it around. And that's what you need to do with your mortgage business. You need to take your loan process and figure out, how am I doing this from front to back, and what's the most efficient way? How am I taking care of intake? How am I taking care of clients? Are you spending too much time on the phone? The other day, I was just listening to a mortgage friend that I know, and he took like an hour and 15 minutes to do an intake call. It was extremely thorough, and he built a lot of rapport. But how many loans are you going to do if you take that long to do an intake call? This is not like fine dining where I can sit and I can dine for 2 hours. You have to be more efficient. So McDonald's did that. And then Ray Kroc comes along and he sees that and he says, I can grow this company because there's systems. So he focused for the next year, 20 years in growing McDonald's. He opened up 20 branches and franchises in that first year. So the key to growing your business is understanding that concept, okay? So in the movie, if I were to go backwards here, here's what he did. Your typical restaurant, it's struggling. But McDonald's, they created processes, and they had a team that would build burgers. And because of that, they were able to leverage up to here, and they started utilizing different technology like shake makers and those little things that they can fill out 5, 6, 7 fries at the same time. And that gave everybody and Ray Kroc the ability to grow. But again, remember I said leadership. As he started growing franchises, it was very, very important the managers that he had for each for each branch, that each branch was managed correctly. And so when I look at management, it's not just the management of your branch, but it's also the management of your processes and systems. You have to take a look at everything on a regular basis, okay? So let's break this down a little bit more. When I look at a business, there's 3 components that will make it successful. Is it self-managing? Is it self-sustaining? And is it self-growing? So self-management is, can you take a loan consistently, efficiently, and fast from front to back? Can you go on vacation and not have your phone ring? Can you trust your team when you're gone? Do you have to take the loan? You know, when you're doing 200, 300 loans a year, the loan officer is not taking every single application. And I know that can be taboo for some people. What do you mean I'm not going to be the one that's talking to people? Well, you're not going to be the one that's talking to people. People that do a lot of loans, they're not taking every single loan application. And I think sometimes people look down on them. They're like, well, you know, it's cheating. He has a team. I'm like, is it cheating? Because he's not slaving behind the cook because he's not the one cooking the burgers? Or is he successful because he's got 5 restaurants that he runs? So it's not cheating. You can have a team of 4 or 5 people. You don't have to take the loan apps as long as you deliver the experience like McDonald's, which is what people expect. It's fast and consistent, okay? So this is a list, and it's a list that I created, okay? And don't take it for full verbatim accuracy, but what I did was every single task that you do manually, there's a process that you can make that task better. Whether it's a time block, a template, a checklist, a pipeline sheet, a procedure, you can create a process for it. From there is a technology that can then automate that, from CRMs to MBS Highway, from things like Ring Central, which will handle your phones, to even WiseHire will help you hire people and create ads for you, right? Training. Everybody talks about training. Well, I want to bring it on LOA, but I don't want to train them. Well, then send them to training. There's technology, there's people there, there's online classes that you can train people, like MLO Masterclass. If you are a mortgage company and you want to train your loan officers, we'll send them to MLO Masterclass, right? There's Flowify for collecting documents. So let's talk about collecting documents. If you're manually calling all the time, collecting documents from people and everything's going back from email, well, number 1, you can create a template. Number 2, you can use Flowify, Simple Nexus. There's a few other ones, and just let that automation happen and then add the people. Imagine adding all the people first. Without all of this, you're just a bunch of cooks in the kitchen going crazy, and you don't know who's doing what, and then you're worried because, like, where are the notes going? And that's why even communication, you need LOS and CRM notes that you can share. So what I look at is I look at a business and I say, there's all these tasks. How can I create these processes, this technology, and add people to it? And that's going to be a well-run business that will do 300 units or so a year. And processes are as simple as just doing checklists. If you guys are starting and you're like, well, what's a process? It's just a checklist. There's a checklist for everything. Intake, think about how the way you do intake, create a checklist for it, and do it the same way every single time. You'll actually notice that you'll cut out steps. Create checklists for packaging documents. Create checklists for conventional, VA, FHA, IRRRLs. Create checklists for every single thing. So take everything that you do and create a checklist for everything that you do. That's a process. And then ask yourself, is there a technology that handles this checklist so I don't have to do it? Then you replace it with technology, and then you add a person that can run the technology, which runs the processes, okay? Now, I'm gonna talk about another part about scaling your business, because scaling your business is not just about operations. There's the last part. It's self-sustaining, the last 2 parts, self-sustaining and self-growing. I think a lot of you really worry about putting time into working on your business because you're worried about, well, I have to take leads, but when the market shifts, how do I make sure that I have enough business? You're going to take all the great things that Megan talked about, all the things that Barry has with MBS Highway, and of course what Shank's going to talk about, but how do you stay consistent so you don't go up and down? Well, the first thing is to have a database. Here's some quick database math for you. The average consumer is going to get a new loan every 5 years. I think I'm being conservative. I don't know, Barry, if you know any numbers, but it's every 5 years. That means 20% of your database is going to get a new loan every single year. So if you have a database of 1,000 people, 200 of those people are getting a loan this year. The key is, do you have a database? Did you put people into the database? Are you nurturing the database? Because if you do, you don't have to look for business so much. It's going to be there. Now, the reason why I said 10% pull through is because 20% is going to get a loan this year. If you keep in touch with them and convert half of it, it's a 10% pull through. So if you have a 1,000-person database, there's no reason why you can't do 100 loans year after year after year. So create a process for calling your database, keeping in touch with your database, and add some technology to automate that. And then you can hire a marketing admin to run that for you. That will keep your 10% pull through every single year. Referrals. Let's say you did 100 loans in 2020. Did at least 50% of the people give you a referral? They should. Otherwise, why did you work so hard to create great service, right? I mean, we all walk around about great service and this and that. It's like, well, if you pride yourself on great service, shouldn't you get referrals too? Shouldn't 50% of the people give you referrals? The number one reason why people don't get referrals is because they don't ask. They forget, they don't ask, they feel awkward. So how do we create that as a system? What I did when I originated is that I created a system that my assistant once a week during the transaction would call all the borrowers and say, how are we doing? On a scale of 1 to 5 stars, how are we doing? 5 being best. If they say 1 to 3, then we apologize and say, I'm so sorry for the bad service. Can you please tell us how we can improve? I mean, not with a smile, right? Just say, I'm so sorry. If they say 4 to 5, they're giving us permission to ask for a referral because we did a really great job. And then she would say, that is so great to hear. We pride ourselves on service because we want you to be happy. And we want to be so good that you would refer all of your friends and family to us. By the way, while I'm on the topic, do you have a best friend or coworker who is in the market to buy a home that we can help too? She did that every single week on the clock. And my assistant got me 8 referrals a month that I paid her $75 a referral, whether they close or not. So she made an extra $600 a month for getting referrals. That's not including my junior loan officer and my LOA that was also asking every time they talked. So we would average 12, 13, 14 referrals. Why? Because it's a system. It's a process system. Could you create technology for it too? Put it on the bottom of your emails. Send out blasts asking for referrals. You can do a lot of that. So you're having all 3 together. Lastly, and I'm getting right to the end, is if you did 100 purchase transactions last year, you probably put yourself in front of at least 80 listing agents. I'm gonna ask everybody right now, how many listing agents did you pull? Did you convert to your side that want to give you all of their business? And most of you say, I don't know, 3 or 4, and that's sad. If you put yourself in front of 80 listing agents, you should get a 20% conversion on listing agents because they should be completely impressed with you, so impressed with you that they want to switch over to you. And it's the same process. At closing, you ask them on a scale of 1 to 5, how did we do? If they say 1 to 3, apologize. If they say 4 to 5, say, that is so amazing. All we ever focus on is to provide great service. So everybody from buyer to seller to buyer's agent to listing agent has this experience. And I hope we get a chance to work together again so you can experience it again. By the way, I don't know your lending situation. Do you have a lender that you work with? They're going to say 1 of 3 things. No, I don't. So you know what to do? Yes, I do, but I'm going to use you now. Perfect. Or they're going to say, yes, I have a lender. And your immediate response is, totally understand. That's completely admirable and respectable. But that doesn't mean we can't do business again. Perhaps there's a time that they can't do a particular type of loan. Perhaps there's a time that they can't do a particular area. Perhaps there's a time that maybe our personality fits them better. Or perhaps there's a time that we can just do business together. I want to be your favorite number 2 lender. You do that consistently, you're going to see a 20% listing agent conversion. And if you do the math, for every 50 units you do, 30 purchases, if you do the referrals and you do the client referrals, you can gain an extra 33 units per year, okay? Without that, you have what I call the leaky bucket. You're so focused on the new water that comes in and all the new business that comes in, you are leaking referrals, you're leaking listing agents, you're leaking people that you've done business with in the past because they're going someplace else. A good business model with the right structure is the foundation. Marketing and sales fuels that growth. So the question that people give me is, well, when do you work on your business? Well, I'll wait till it's slow. Great. When it's slow, you have time, but now you're stressed because you need to also spend that time marketing. If you do it when it's crazy, you have the leads, but you also need to handle, the loans. So the best time to work on your business is a small percentage every single day, and you do it first. Because according to the E-Myth, you're an entrepreneur, you're not self-employed. And if you do that, Brittany comes back, you free her up, and you become this balanced loan officer with a real business that's going to do 200, 300 units a year in 40 hours a week. And Andrew, I think I just hit the exact 30-minute mark. It's like I was on caffeine.
That is amazing. And I'm not shocked. I know how precise you are. I know actually, how strategic you are, with your practice, how you are with your business, and how you are with your clients. I've just heard so many amazing things about actually how you've helped actually your clients kind of to strategically plan their business and make it so success is not an accident, but it is a carefully defined formula. And listen, one of the things that's great is you get more access to Khai and the rest of the presenters here by getting instant access to the MLO Masterclass. Just pasted the link right there. And I don't know if Khai, if you wanted to address some of the questions that might have come up. I mean, people are asking. They want to know a little bit more about you. One of the people they were like asking, what's a good CRM to use, and I don't know if you want to address any of the questions.
Yeah, as I'm going, the first thing I'm thinking to myself is this mic even on? Because sometimes you're on the Zoom and it's like, are people listening? Am I even on? And so the whole chat was covered on my second screen. When it comes to CRMs, what I'll tell you first off is that there's two types of CRMs. You got marketing CRMs and you have sales process CRMs. You need both actually. So it's okay to have two CRMs. The marketing CRMs is going to be like the Total Experts, like the Surefires of the world. And then the process CRMs is going to be like the Shapes, the Shapes, the Whiteboards, the Jungos of the world, because they're more into processes and managing teams. Okay. In terms of checklists, you can go to my website, KhaiMcBride.com, and there's a free checklist that you can download in case you want a basis for a process checklist. It is an intimidating 190 steps that I use to close a loan, which by the way started at 40, but I grew it. But that's what I built my team to do, about 250 units a year, about 100 million a year, working 35, 40 hours and relaxing. And that's what I really preach and help people with, is to take their lives back so that you don't become 2007 Brittany. As far as the rest, I mean, I can look at some of these, but I also don't want to encroach on Shashank's time. And again,
go ahead.
Yeah. So let's see here. Some people feel attacked with the leaky bucket. Yeah, I get that. And I'll tell you this though. Again, don't jump too fast into CRMs. First, look at your processes. Do things like just make your phone calls to your database list. If you could set up your business with two basic things. Create a checklist for your loan process and create a CRM that you just use every single day and you take notes and do your follow-ups. And create that routine first, because that routine is a process, and then bring somebody to do that routine. And then from there, you can spend the rest of your days just tweaking it, adding automation, adding features, and everything else. And just remember, I mean, I'll leave it with this before Shashank. Processes, technology, and people. Every time you have a problem, ask yourself that question. How can I process this? How can I automate this? Or how can I delegate it to somebody else? And then your empire will get bigger and bigger and bigger every single year. So that's it. Thanks for the time. I hope everybody will check out MLO Masterclass. I know we've got a great 30-day trial, and we'll provide this information. So Shashank, Andrew, I'll leave it back to you guys.
Fantastic. Always great to get the pearls of wisdom from you, and it's great to know actually that that Bill Hellstad is your mentor. I mean, that's amazing to hear actually. Someone like you actually getting actually your knowledge and your kind of some of your motivation off of a great like Bill. And thank you so much. And all right, and everyone, I just pasted in the chat box the link to the MLO Masterclass. If you have any issues, there's an email address there that you can just email our team, and they'll make sure that we get you access so you don't miss the 30-day trial and the discounted offer that we have available. And with that, Shashank, take it away.
Thanks, Andrew. let's change the view here. Perfect. So that was amazing. As in, I have all three of you. I have huge respect for everyone here. Barry, I've learned so much from. Megan, Khai are just amazing friends and people I've learned so much. So this has been already probably one of the best events that I have been part of. What I'm going to talk about is everything. I mean, all of them kind of alluded to the fact of not just having the strategies in place and plans, but really having the mindset. So I'll start the presentation here. Andrew, just can you confirm you can see the screen and hear me okay? Sometimes when you go to the slideshow mode, you lose something.
Okay, we're not seeing the screen yet, but we are seeing you. And
okay, let me try this again. That's why I remember last time I was doing it, I was 30 minutes into the presentation and then realized that nobody could see the screens. Let's try this.
There we go. We see it.
Okay, cool. And put in the slideshow mode here. Perfect. Cool. So what I'm going to talk about is different than tools and tactics. I'm going to talk about top producer mindset. What I have seen is, in my own experience, just to give you an idea, I've closed about $1.5 billion in just in the last 4 years of being in the business. Last year closed about 360 million. And I've also, of course, spoken to a lot of other top producers. Khai coaches a lot of them. Barry, of course, was one himself and interacts with a lot of them. But really, my interaction with a lot of people has taught me that top achievers do not always have better ideas or tools. What they have is better mindset. I mean, they have access to the same ideas, same tools. They may implement it and you may not, but really what sets them apart is better mindset. And that's what I've seen in terms of all the top achievers that I've met, whether it's in the mortgage industry or outside, is the mindset is really the top of the pyramid. It's where you start, because we get caught up into a lot of shiny things, a lot of tactics. Okay, I need to go and talk to a real estate agent. How do I do that? How do I build my database? What kind of CRM should I be using? A lot of you are asking those questions, and those are all relevant questions and very, very pertinent. But where I see a struggle is that not that you don't have answers to it. Most of you do probably know what to do about it. Is that what separates the 99% from the 1%, or even 0.1%, really, if you're doing 20, 25 loans a month, you're probably in that 0.1% of the industry, is the mindset. By that, what I mean is, and I'll be talking about some of the mindsets of the top achievers in the following slides. But really, most of us are kind of focusing on strategy, plan, or tactics. Strategy is like if you're a loan officer or a business owner, you're thinking, okay, I'll go after real estate agents. That will be my biggest strategy. That this year I'm going to focus on real estate agents. That's your strategy. Your plan is, I'm saying, okay, I'm going to work with real estate agents who do 10 plus loans, and they're buyer agents, and they handle 8 out of 10 transactions, which are on the buyer side. That's your plan. Your tactics would be, okay, I'll meet with them every month. I'll go to their open house. I'll make them flyers. I'll send them MBS highway presentations, or I'll go to their office and do that. Those are your tactics. And we focus almost 99% of our time on either a strategy, which is actually very less. In fact, I've seen most around tactics, day-to-day stuff, like, I mean, what should be my script? What should be my CRM? What kind of technology are we using? Most of that is tactics. If you figure out your strategy, then planning and tactics is easier. But even more important is your mindset. And mindset starts really the first thing in the morning. Your habits build your mindset. And this is something that I'm a huge fan of. I'm going to share what my 20-minute morning routine looks like. And this is quick. So because a lot of us are like, okay, I mean, I have kids to drop to school, and of course, kids right now are probably doing online schools, but we have so much to do in the morning, is that it's difficult to have, say, a 1-hour routine or a 45 minutes routine. I tried doing that and could not have 2 kids at home as well. So I condensed it into 20 minutes. And I have been doing this since, almost 5-6 years now. 2017, we were trying to make the list on the Inc. 500, which is 500 of the fastest growing private companies in America. And there are over 6 million private companies. Imagine if you're trying to make the 500 list, how difficult is that? And that year is when I started doing this, is because I was like, I'm not sure we are there yet. And I wanted to have a little bit more clarity, a little bit more flow focus going into the day. So 7-minute workout, 7 minutes is actually an app on App Store or Android, wherever you are. If you were to download it, it has 5-6 different versions of different workouts that you can do. I'm sure some of you probably do a much longer workout, and that's great. But even if you don't have time, you can do a 7-minute workout. Do 10 minutes of meditation. It does not have to be anything fancy. It can be a guided meditation. It can be just focusing on your breath. I mean, if you haven't done it before, you can just sit silently. Even if thousands of things go in your mind, that's totally fine. That's how you start. Gratitude, that's something that I practice every morning and every night. 3 things that you're grateful for right now. And it can be something really small. It can be something, I mean, someone brought you coffee the other day, the day before or the morning, and you did not expect that. I mean, you should probably be grateful that that person did that for you. So it does not have to be something super big, like I have this fancy home, or I closed on a mortgage, or whatever you did. It can be something really tiny that you're grateful for. I think Tony Robbins, I think, said that you can be grateful and anxious at the same time. So if you're grateful about things, then you won't be anxious about some of the other things in your life. Then I focus on or talk about 3 aggressive goals that I want to achieve in the next 6 to 12 months. And all of this is really 30 seconds to a minute. So that's why the entire routine is not that big. Your 3 aggressive goals could be whatever you're looking for, and that could be personal or professional. So you could be thinking, okay, in 12 months, I want to be 100 million a year producer, or I want to give that big builder account or big real estate agent office, or I want my kid to be a straight A student, or make the high school football team, or whatever you are thinking that you can actually control is what you're thinking about. That what are the 3 aggressive goals that I want to achieve in the next 6 to 12 months? And then finally, I end my 20-minute morning routine by one thing that I want to get done today that will help me with one of those goals. Just one thing for the day that if I do that, at the end of the day, I'll feel great about myself. So that's how my morning routine looks like. Of course, you don't have to copy it exactly. This is something that I customized for myself because this specific pattern really worked for me. Let's talk about some of the mindset, because we just came off of probably the best year for a lot of us on this call. Best year in terms of probably the number of loans that we did, the money that we made. And this is what I posted in August on Facebook. I said, I mean, I had a $77 million pipeline at that point of time. And I said, hey, you're all amazing, doing great things, but do something substantial from the extra money you're making right now, which will have a long-term impact on your business. Upgrade your tech stack, try out some new marketing ideas, build a bigger team. A consistent business requires consistent investing. And now is a good time to do that. I read a book. I was coming off of a great year in 2016, which I'm assuming a lot of you did. I think it was 176 million production year. And the beginning of 2017, if all of you remember, the rates went up. We had a good refinance in the last quarter of 2016, and the industry was struggling at that point of time. And I read a book called What I Learned Losing $1 Million. It was about a stockbroker who had a really good run for a few years. It's based on a true story. I don't remember the name of the author, but the book goes on where he has a really good run for several years, and he credits himself for that. Like, he thinks he's amazing. He's really good at picking these stocks. He's really good at picking the commodities, and he's really nailing the stock market. He was mostly into commodities and doing really good with it until everything started going south. And then he looks back at it and realizes that he was giving too much credit to himself for winning and too little credit to all the luck and the fortune that was going in his favor. And that's what we tend to do as well as loan officers. When we have year like 2020 or even 2016, we are like, whoa, we just nailed it. I mean, what a year we had. We must be really good. And we give little less credit to the fact that maybe it was the interest rate that made us look that good. Because if we were that good, how come every year is not the same way? How come every year we are not at 70, 80, 90% of the same production level? Why do we go up like this and go down like this? So it's very, very important that when you get a year like 2020, you take the money and you invest. And that's what I did. I run a company called Arcus Lending, if you don't know me from before. And this is where we were in 2019 on the left and 2020 on the right. We were 5 people company in 2019. The 5 people, we ended up at 100 people at the end of 2020. We were licensed in 6 states, went to 20 states. We had 2 offices, we have 11 offices now. We, as a company, closed just over 200 million, which was just mostly me in 2019. In 2020, we closed about 700 million. Our tech stack was basically Calyx Point, Loan Sifter, and Google Drive. And we implemented Byte Pro, Optimal Blue, DocMagic, Be in Touch, Blueprint, and our own app on iOS and Android. And this is not even the entire list. We were just a broker, just a full broker company. That's all we did, wholesale business. We started our own underwriting team with 6 in-house underwriters, and we are now a true hybrid broker and banker channel. And this is on top of me personally doing 360 million of production that year. So you can see what I mean by this is what top achievers do, is that when they have a year like this, it's not about taking the money and buying bigger houses and driving a Ferrari, but actually taking it so that you can future-proof your business. Now that Arcus is on this side of it, I don't have to worry too much about next 2, 3, 4 years in the business, is because this is built for future now. And that's where the top producers do much better, is that they understand this. They understand that the consistent business requires consistent investing. Let's move on. Focus on LTV, not 1TV. Now, this is something that, Barry talked about. This is something Megan talked about, and even Khai talked about. In marketing terms, LTV is called lifetime value. Of course, in mortgages, we use LTV as loan to value. But if you're talking about marketing terms, lifetime value is what LTV stands for, and not one-time value. So what you're looking at is, in marketing books, you're taught about loss leader pricing. Amazon, when they were getting built in the first 5, 7, 8, 9, 10 years, Jeff Bezos kept telling the investors is that, look, we are losing money, but don't worry about it. I know that we will make money eventually. What he was trying to do is that he was trying to create what is called loss leader pricing, is that we will discount our stuff so that you get used to working with us, eventually to a point where you can't think of anyone else. Because he was looking at LTV for a client. He was looking at the lifetime value of a client, is that if I get them hooked onto Amazon now, I can get them to spend on Amazon for the rest of their lives. So he wasn't looking at one-time value. He wasn't looking at the fact that if I get this client now, how much money am I making? Mark Cuban said business happens over years and years. Value is measured in the total upside of a business relationship, not by how much you squeezed out in any one deal. So we all know, Barry talked about it, Khai talked about it, and numbers are different depending on who you're listening to. But we hear from the fact that people refinance every 5 years, move every 7 or 10 years. But you can get a year like 2020 when pretty much everyone refinances, like 70, 80% of your database probably refinanced last year. So imagine if you treated your clients as more as a lifetime value, thinking that they refinance every couple of years, 3 years, 5 years, whatever that number is, because that number keeps changing depending on the market you are. And they move every 7 to 10 years. Now you have a client which is potentially does 4 to 10 transactions with you. If that was the case, you wouldn't be so much focused on the first transaction, whether I made my 2 points, 3 points, or 4 points on this client. I got in the business in 2008, and the first 12 months I did 7 transactions. That was half a transaction a month. And those 7 clients are worth, I haven't calculated it, probably worth $500,000 each. Because of all the referrals, of course, I refinanced and bought them investment homes and future homes, but all the referrals that they gave out and all the referrals that came from their referrals. So it's very important that, again, a top producer mindset, you focus on LTV and not 1TV. Let's move on. Let's tackle the oh my effing God syndrome. It's one of the biggest problems that we have. Our industry has so much potential of things going wrong, is that we are anxious all the time. If something comes to you, like you had a loan which was closing this morning and something happened last second and a problem came up, your first reaction to it is that I can't effing believe that this has happened. I mean, are you effing kidding me? Are you being serious right now? What did the underwriter do? We have this problem of being focused on problem all the time. I have had, like I'm sure all of you, there's thousands of problems while I'm trying to build a company. I've gotten things wrong. Somebody else in the team got wrong and everything. You need to move from your problem mindset to solution mindset the moment the problem comes to you. If you get stuck in the problem continues to get deeper. But if you immediately move from, okay, so this thing went wrong, what's the next step? How do we solve this? You immediately move from a problem mindset to a solution mindset. My teammates and my partners and everybody that I work with, they say that you're the calmest person that we have ever worked with. How do you stay so calm? Is because I do not dwell on the problem. We can come back to the problem and see what caused it and hopefully try not to repeat it. But you move to the solution pretty quickly in terms of what's the next step. Do I need to call the real estate agent? Do we need to pay per diem on this? How do we fix this thing instead of getting into the complaint and blame? When things go wrong or you're planning for the future, focus on what you control. So if you are doing business planning, it's only Feb. Hopefully you've done that already. If not, you're planning on doing it. Focus on things that you control. As in if you listen to MBS Highway every morning, you already kind of know where the market is heading today or in the future. So you understand where the industry trends are, and then you focus on what you control and you build and you plan for the future according to that. What you control are your daily habits and actions and nothing else. Like Barry was showing a chart where we moved from 3 and an 8 to 4 and 7, 8, I think, within 3 months. That was, I think, 2013, if I remember the market, where we had 1.5% increase in rate in 5-6 weeks. That was crazy. And I had some floating loans at that point of time. But you don't control that. What you control are your daily habits and actions. And that's why I said the morning habit where you build that and ride your small win to reach a bigger goal. That's a 30-second rule that I implemented very early, several years back. I call it 30-second rule, is because when you try to implement something new, I mean, try to hit a small goal at one point of time. If you're trying to go from, say, eating donuts 4 times a day and not working out at all to trying to become get a 6-pack, that's not going to happen next morning. So you probably want to download a 7-minute workout app and say, okay, that's all that I will do, or 1 donut a week is what I'll skip. If you're trying to do that, you're trying to ride your small wins to reach a bigger goal. But if you're trying to go from one space to the other space, which is in a completely different dimension, that's not going to happen. So again, repeating it, that you need to be coming from a position of solution and not from the position of problem. And finally, you need to cultivate an always learning mindset. Again, I told you I got in the business in 2008. I had literally no mortgage experience, very little bit of being part of a mortgage company, but not really being a loan originator or anything at that point of time. And I got right into it. I read Fannie Mae Seller Guide pretty much cover to cover. And a lot of loan officers will be like, I'm a loan officer, I don't need to know underwriting. In 12 years of being in the business, I haven't had one pre-approval got declined in underwriting. I have never had a loan got declined in underwriting, even after originating about $1.5 billion. Is because I know my guidelines. That's why learning mindset is so important, is that when things go wrong, you try to learn from your own mistakes. When things are something that you don't understand, you try to learn and figure it out. When markets started moving in March during COVID, when volatility was that high, Barry came up with a white paper on margin calls and everything else. I knew nothing about any of that stuff. I was a broker. I had no secondary experience at that point of time. And I just could not understand what's the big deal about these margin calls and why are the interest rates fluctuating so much. And so I poured into everything that I possibly could. I read MCT commentary. I read Rob Chrisman. I read a lot of course, I was listening to Barry every morning. It's that you always need to have that learning mindset, because that's what takes you to the next level. There's a law of 5 R's, which people like Bill Gates, Jack Ma, Elon Musk, and those are just the 3 names in this article. I can tell you that pretty much every successful person probably follows this or more, which is, the concept is, it says wonderfully simple. No matter how busy successful people are, they always spend at least an hour a day or 5 hours of work week learning or practicing, and they do this across their entire career. If anything, even during these busy times, that for me, that learning has only gone up. I mean, every time I used to drive to work, Audible is my favorite app. I used to probably listen to a book uh, every 2 weeks. I would finish a book, and then we'll try to implement some of this. But you do this through your entire career. At no point of time, irrespective of what level of producer you are or a leader you are, that you stop learning. There are always people that you can learn from. And finally, before I wrap it up, really, I wanted to tell you is that every tactic that you want to learn, pretty much everything that you can learn in the industry, we have that in MLO Masterclass. We have 20 plus masterclasses teaching you literally everything from lead acquisition to realtor referrals to productivity to, if in fact, if some of you were wondering is that how did I grow my company that much while doing 351 million in production and launching MLO Masterclass, I have my masterclass on time management and productivity there. But all of this really comes down to execution. I mean, you have to be passionate about execution. Is that you had 4 trainers today teach you about everything. When you go back, it's really, you can take one thing out of all of this thing, which is good enough, but really you need to figure out what you want to implement, because all the learning is useless until you go back and execute on it. And that's one thing that I think I've done very, very well over the last few years. Probably, I mean, all of the people who you listen to must be masters at that to reach the level that they have. But I mean, and that's again a top producer mindset, is to execute on things. That when you listen to something, you execute. Khai was my coach at one point of time, and I've had a few other coaches in my life. And one of the biggest problems that my coach has had with me is that I'll execute on things way too quickly. As Khai will come back, or other coaches will come back, and they'll say, "Okay, I taught you this," and I'll like, "Okay, I'm done with this. What's next?" And that's the kind of person that you want to become if you want to become a top producer, because that's the mindset that they have. So that's basically what I wanted to teach you today. And of course, wanted to end with giving you free access to all of this. Listen, I have 10, 12 years of me personally being in the industry, and whatever little success that I've had, this is the first time that I've put that into one program, one training program. And if that wasn't good enough, you're joined by 3 of my illustrious colleagues here: Barry, Habib, Megan Anderson, Khai, McBride. They're all full-time faculties, and several of other industry trainers who have recorded these classes. And they're not all it is. Of course, we'll be creating content almost every month and producing new master classes for you on different topics, which you can come back and really ask for and say, these are the things that you want to get better at, and we can work on it. But we already, I mean, truly, if I was on the other side, I'll tell you that every one of this master class is probably worth the entire annual membership fees of the course. If I could have seen some of these classes when I was struggling back in 2009, 10, 11, and trying to figure out how to get better in this business, I mean, this would have been priceless for me. So hopefully you can learn some from it. But that's all that I had to share today. I'll look at if there are any questions, Andrew, here that I can help with.
Fantastic. So, and Shashank, I mean, if you wouldn't mind, can you share some numbers, like, because you do so much with not a lot of resources. Can you just share, like, what was 2020 for you? What did your production look like, and what size staff did you have?
So my personal staff is just, I mean, my personal production staff is 5 people. It's me, it's 3 processors, and my admin assistant. That's my personal team. Of course, as I said, Arcus Lending has grown to be about 100 people now. But that's my personal production team. And we got 1 extra person. So we had 4 people to do about 200 million the year before, added an extra processor to clock about 360 million last year. So that I think, again, is how, and some of those trainings are there in Masterclass, where I talked about productivity, I talk about time management, I talk about leadership, I talk about hiring. Like, how do you get people like that who one processor could do 100 million a year? So she's probably the processor that does most amount of production in the country. And I wish I mean, of course, we can go all day long, but that's what those master classes are about in terms of teaching everything, those specific things in detail.
Fantastic. So, all right, listen, I'm going to paste the link actually back in here, and we are just about at 3 o'clock. just being mindful of your time. So sign up if anyone has any issues. There's an email right there. You can just email us. We'll take care of this. But don't worry, you can get started, get access right for the weekend. I mean, this is like perfect for the weekend. You can dig into this stuff over the weekend. Hopefully, you'll find some downtime this weekend to be able to access some of this material, and just you're going to get immediate value to it. So with that, I think we're going to wrap up here. So I really appreciate everyone sticking around. I mean, we just some unbelievable, like, game-changing information that's been shared here. Barry telling us about the market, what we should feel confident about, what we should be worried about. Megan talking to what to do with that information. Once you have that access to that information. Khai talking about the systems to be able to grow your business, and of course Shashank, giving today's experience, what it's like to originate out there using his systems. And again, all of this stuff, everything on here is all on MLO Masterclass, and a lot more. All of these great leaders. So everyone have a great weekend, and thank you so much for joining us.